Towheduzzaman. My ID is 2021331089. I'm going to discuss about uh, some concept of income and spending. Let's break down the definition of income and spending. The income and spending in macroeconomics deals with the distribution and use of income among many sectors like household, business, government, and external sector. Main sectors among them are household, business, government, and external sector. Those are here denoted. Then we need to look for circular flow of macroeconomic activity. While the economy of society somehow convert into spendings in income society and the spending in one part make income for other, therefore this activity create an endless circular. That means circular flow of macroeconomic activity is an endless process. Okay, look at here, household, from household to farms, from farms to household, government to farm, farm to government, and this circular flow goes on. Okay, now we should discuss about one and two sector economy. One sector economy means a economy that consists of a single person who himself is both producer and consumer. Like example can be for that Robinson Crusoe in his adventure into the isolated Iceland. When he was isolated on the Iceland, then he create and one sector. How? He produces goods and consumes goods. That means he need to make food by himself and he consumed it by himself. Just look to this view of a single individual consumes good, again produce good. Then two sector economy, what does it mean? Two sector economy, one produces good and another one consumes good. That means it's not like one sector, just kind of opposite of one sector. Here in this economy there are two sectors involved. One is household and the other is business. Then the three sector economy, on the three sector economy there come another sector, and that is government. One of the most important sector, it is government. Okay, then here is another sector economy, and that is fourth sector. In this economy, apart from this sector of previous one, there is an external sector. And in this external sector, it is also called foreign sector, and export import or net export occurs here. Now, the main part I'm going to talk about, that is national income accounting, how to calculate it and how it works. National income accounting is a method of measuring the total value of goods and services produced in a country over a specific period, usually 1 year. That means in 1 year, the total value of goods and services produced is called national income accounting. It can be expressed by the equation y equals c plus I plus g plus ex minus im. Here, c refers to, or c means personal consumption expenditure, I equal private investment expenditure, g equal government consumption expenditure, and nx means net export. Here, nx equal ex minus im. Ex means export minus import. By doing this ex minus im, we get nx, net export. And national economic can be measured using two approaches. One approach is earning approach and the second one is product approach. Earning approach normally focuses on the total income earned by factors of production, and product approach focuses on the total expenditure on goods and services. Now, we should discuss about product approach. This method calculates GDP by summing all expenditure made in an economy. GDP is the total value of goods and services purchased within a country in a specific period. That means the equation we saw here, y equal c plus I plus z plus ex minus am by that is come from product approach. Components of GDP, personal consumption expenditure. We saw there C, and this is that C. This includes all spending by households on goods and services. Example of this are food, clothing, healthcare, entertainment. The second one is private investment expenditure. It includes spending by business on capital, goods such as machinery, tools, and construction. It also includes changes in business inventories. Government consumption expenditure includes spending by federal, state, and local government on public services. Examples of this are infrastructure projects, defense, education, and need export equal export minus import. What does export means? Export means goods and services sold to foreign countries, and imports means goods and services that's purchased from foreign countries. Okay. Then some key economic terms explained here that are NNP, GNP, GDP. So what does mean by NNP? The total monetary value of goods and services produced by a country's citizens, both domestically and intentionally. How to calculate it? National income minus indirect business tax. That means if we subtract indirect business tax from national income, we get NNP or net national product. Then gross national product, the total value of all final products and services produced using resources owned by a country's resident, including income earned abroad. How to calculate it? GNP or gross national product equal NNP, that means net national product plus depreciation. That means if we add depreciation to net national product, then we get gross national product. Okay. And the one of the most known term is GDP, gross domestic product. And how to get it? For gross domestic product, we have to add GNP or gross national product to outward remittance minus inward remittance. Okay. Then go through the earning approach. National income is calculated as the sum of earning from the four factors of production: compensation for labor, rent from land, interest, profit. So national income equal wages plus rent plus interest plus profit, and net national product equal national income minus indirect business tax. That means indirect, if we subtract indirect business tax from national income, then we get net national product. Then gross national product, then gross domestic product calculated in this way. And lastly, national income measurement helps in understanding the economic performance of a country. The income approach calculated GDP based on income earned by production factors, while the product approach calculates GDP based on expenditure in different sectors. Both methods provide insights into a nation's economic health. And that is all about the main concern of national income accounting. Thank you for continuing with me.